you go through life, you invest in dozens or hundreds of stocks, but it's only a single-digit handful that actually really create wealth augmenting kind of return. Elon Musk was up to his usual tricks. I mean, what was the bigger story in 2023 from Elon Musk? The fact that SpaceX was such a huge success and there was rumors of an IPO, or is it X's decline in value and advertiser interest?
2022 was the 7th worst year on record for the S&P 500 in the last 100 years, and it was the worst ever for a 60-40 portfolio. It wasn't because the bonds crashed so heavily. It was actually the worst year ever. I was kind of looking ahead to 2024. Does it follow the same pattern? And it doesn't really. Amazon is cutting jobs. So Duolingo more than tripled its market cap in 2023. The first company I looked at was Copart. If you're lucky enough to own this business in the last 10 years, you've been doing very well. I think you'd be sitting on a 10-bagger already.
It's the first stock I picked from MyWallSt.
And it's still been performing. Even in the last 5 years, I think it's tripled. Hi there, and welcome to Stock Club, podcast brought to you by MyWallSt. I'm Mike, and joining me in today's episode is MyWallSt's chief investor, Emmet and Mike. This podcast is brought to you by Vodafone Business. Now, if you're like us here in MyWallSt, you'll know that running a business is hard. There are countless things to think about, some get ignored, and some get completely forgotten about. That's where Vodafone Business can help. They've crafted a suite of tools and supports to boost your business's operations, and the best part is it's free for everyone. From cybersecurity to harnessing the power of AI, building a website and improving how your teams operate remotely, Vodafone Business will help you address the often overlooked but crucial elements for your business's success. To get started today, check out their Vodafone VHub digital support and advice service. You'll find everything you need right there. Find the link in our show notes or just simply Google Vodafone VHub for more details. Now, let's dive into the show. Emmet, how you doing? We are back after a long enough break for me and you anyways off the pod. Well rested, I hope, and ready to get back into the new year.
Ready to go, Mike, big and bold and ready to take on the year. Very excited about 2024.
Yeah, it'd be an interesting one. I said we'd start this episode with kind of looking back on 2023 a small bit because, you know, at first glance, it was a huge year. The S&P was up nearly 25%. The Nasdaq was up more than 50%. It was its best year since 1999, which is a bit ominous, I think. But you could feel like you missed what was an unbelievable year on the market if you didn't own maybe 7 stocks, which were responsible for a significant amount of the gain. So what did you think of 2023 as a whole?
Yeah, it was a year with a lot of change in it and a lot of, well, every year brings supernormal events. It really does, like, because, you know, that's just the way it goes. But like, as you said, the S&P 500, which is our preferred benchmark, grew nearly 24.5%. But when you strip out the Magnificent Seven, which is Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, and Tesla, who collectively gained over 60% in the year, the other 497 stocks only grew 8.2%. So that was quite an unusual event. I wouldn't call it supernormal. Those type of events have happened in the past where the S&P or an index's performance has been driven by just a few key performers. And that's what we see in our own portfolios. You go through life, you invest in dozens or hundreds of stocks, but it's only a single-digit handful that actually really create wealth augmenting kind of returns. And we saw it in a pronounced way last year. But there was a lot of other things in 2023 that were very notable. Like, for example, the US economy's Inflation Reduction Act did actually stimulate the economy, and investment in energy transition boosted sectors like infrastructure and construction projects and the electric car industry. And we didn't really cover that in a podcast because we kind of sidestep macroeconomics for a couple of reasons. Notably, we're no experts, but it was a big thing. There were other events during the year we spoke about, like the guilty verdict of Sam Bankman-Fried, SBF, who our listeners will recall was the founder of FTX, the cryptocurrency exchange. There was the grand retirement of master investor Charlie Munger.
The
Elon
grand
Musk.
retirement.
And rest his soul.
One way of saying it, yeah.
Yeah, Elon Musk was up to his usual tricks. I mean, what was the bigger story in 2023 from Elon Musk? The fact that SpaceX was such a huge success and there was rumors of an IPO, or is it Twitter or X's decline in value and advertiser interest? I mean, there was so
Yeah.
many interesting stories for us, and I think 2024 will bring us a whole barrel load more for us to get through.
Yeah, it's funny you mentioned Elon Musk. Like, if he just stayed out of the limelight, Tesla stock doubled in the year, and SpaceX did have two fundraising rounds where it became the most valuable
Yeah,
private company in the world. You know, if he just
it's
kind of
amazing.
if he just stayed out of the limelight, he'd be doing very well. But it seems
And he's up to his tricks again. I mean,
addicted.
the news, it comes so fast. I remember, honestly, 3 years ago, we were like, we just can't talk about Elon every week.
Yeah.
Because every week we got a fresh story handed to us. And there's one this week. I'm not going to dive into it. But then on the other end of the scale, we look at Tesla's great success and SpaceX's success in 2023. And it feels like years ago, but it was only 2023 when Silicon Valley Bank and Signature Bank both went bankrupt and went under. I think it was around March time, and we had a good chat about that. And that was an unbelievable event because having an account with Silicon Valley Bank was as certain as having a CTO in the tech industry. Like, it just was something you did. We did it. MyWallSt did it. Every bank, every giant business had a deposit with SVB and to a lesser extent Signature. So there were huge events, but the years just keep trundling by and the market figures its own way forward.
It's true. It's true. It seemed to be a success in spite of itself. And I was kind of looking back, trying to figure out the major themes, and a lot comes down to expectations. So
Yeah.
basically everyone predicted a recession to come in 2023, and it didn't happen. Inflation cooled, but the unemployment numbers stayed low, and they ended hiking interest rates with a view in 2024 to cutting them again, which is a major factor. And I know we don't like to talk about macro too much because we might show how little we know about it, but in general terms, that's a massive kind of impact that, not that it doesn't go unnoticed, but is almost, we'll say, confirmed in investors' eyes at the minute. You know, it's kind of at the sell the news stage of the cycle, if you know what I mean.
Yeah.
So, but Ben Carlson did a really interesting statistical analysis, and we can kind of highlight any number of issues of why it was such a good year. But when it comes down to it, and this is obviously oversimplifying it, 2023 was a good year because 2022 was a bad year. Do you know what I mean?
Yeah.
So 2022 was the 7th worst year on record for the S&P 500 in the last 100 years, and it was the worst ever for a 60-40 portfolio, which would be a classic advisor position. We'll say you go 60% stock, 40% bonds, and because the bonds crashed so heavily, it was actually the worst year ever for a lot of Americans and for a lot of investors who would just kind of invest in this traditional manner. So it's not surprising to see 2023 rebound like that. And Ben Carlson did the study. He said basically, for the most part, a good year comes after a bad year. There's, of course, exceptions. There's the 1973 bear market and the Great Depression, which lasted multiple years. But if you go through a really bad year on the market, there's a high likelihood that the following year is going to be a good one. So in 2002, after the dot-com crash, the S&P was up 28%. After the great financial crisis, it popped 26%, and on it goes. And 2023 is another one of those. And then I was kind of looking ahead to 2024 to see, does it follow the same pattern? And it doesn't really, which isn't surprising. So good years can come in clumps, which is good to hear. So I wouldn't get overly excited about, all right, well, it was good last year, it's going to be bad this year. We've seen a number, even in recent memory, basically all the 2010s. If you take out 2011, 2015, and 2018, the S&P returned double digits every year for the decade. There were 5 years from 1995 to 1991 in which the index returned at least 20% every year. Now, in fairness, that was a lead up to a bubble, so you can kind of put an asterisk on it. But I guess what I'm saying is it just further proves the need to be in the market and not try to time it and not stay out and not flip-flop, because if you're missing those good years, it's going to cost you so much more than if you were right once. Like, if you stayed out of the market because you thought it was getting frothy in 1996, you would have been right about the .com crash, but you would have missed 4 amazing years where your portfolio would have doubled or more.
Yeah. Yeah.
So
Yeah.
it's a really interesting statistical analysis. It's on Ben Crassen's blog called "The Wealth of Common Sense." It's worth reading. All this stuff is worth reading,
It is. Yeah. Yeah.
but yeah, it
And
just goes to
indices
show.
are, yeah, I mean, indices are so reductive. Like it's we decide is a year good or bad because this index, whether it's the Nasdaq or the S&P 500 or your local index, has performed, and you're like, well, I haven't done as well because we all benchmark. That's how we go through life. We go, I could have assigned my dollars or my euros to this index and simply done better than I would have had I just, left the index to it. But the reality of the situation is very few people feel what the index says. What I mean by that is you go to the average voter in America, if there is such a thing, and say, was 2023 a good year or a bad year? And you don't mention the stock market, you're going to have quite a loaded answer on how, in fact, their lives went, the cost of living, what they saw, their investments and their everything else, the cost of education and healthcare and jobs and employment, all the rest. So we look at the S&P 500 and we go, well, last year was a good year. And the reality is, unless you held the Magnificent Seven, it probably was at best a banal year, but more likely not a great year. And to paraphrase, or maybe directly quote my friend Bill Mann, who, as you well know, Mike joined us on stage in November for the Horizon Live event. He said, if you strip out the Magnificent Seven, we have endured the most grueling bear market of small caps in history. Am I right in saying it was? He said that, right, Mike?
Something along those lines, yeah. No, I
Yeah.
think they resurged since November. They've had a very strong finish to the year, but at the time,
Yeah,
yeah.
they did. They did. No, in fairness, they did. Thankfully, because small caps need some love, and they're going to get it, in my opinion. I think, despite what we've seen in the last 12 weeks, a surge in small caps, I think there's plenty more to go because, as they say, money cycles in and out of big caps into smaller caps, and I think we're going to see something on that front in the year ahead.
Yeah, yeah, and that on that note, now I think it's time to talk about trends we see
Yeah.
for 2024 and beyond. So maybe I'm talking against myself a small bit when we're talking about we can have a number of good years in a row. But in your opinion, now what's kind of your view of 2024 from a helicopter perspective? Was it?
You touched on it there, Mike, which is always invest. Just keep investing. Now, that's not an answer. What's my view? How will the market go this year? I know what everyone else is saying. I know I get all the different economists' opinions, and I would say the consensus opinion is kind of flat. The year will be flat. I feel, and I've touched on it, that there is going to be a lot of money going into value small caps, which have been left for dead in the last 2 years, where they continue to improve and grow their business, yet the money was pulled out of them. I could list off the top of my head half dozen stocks that are down 80% that in the last 2 years that have actually improved their operation in the last 2 years. And that can continue, especially when they're profitable, because these businesses are in growth mode, and that will ultimately be reflected in a very simple number, which is their PE ratio, for example. So I'm feeling good about the year ahead, and I think there's a lot of very promising and interesting trends that are occurring. When we go down out of the helicopter and get a little more specific, I think there's a lot of things there that we can have a chat about.
Yeah, yeah, and there's so much. We can go so many directions with this, and I think this could be a very scattered pod if we did, like, as in the first CRISPR treatment has been approved by the FDA. What does that say for that whole industry, for the whole healthcare industry? And
Yeah,
like,
I
it's
mean,
not
it's
proven. Sorry, go on.
no, I mean, CRISPR as a technology is just mind blowing when you actually extend what we're looking at today to where this technology can bring us. It's truly unbelievable. So maybe what I'll do is, how about I kind of give you a pitch for what I believe will be the top trend in 2024 at a microeconomic level, not the macroeconomic
Okay,
coming
yeah, yeah.
down out of. So we have an array of promising technologies that you could say they were all birthed in 2023, or a lot of them came into our consciousness in 2023. But these technologies, like, they're no longer in a lab, they're no longer just the subject of a TED talk, but they're out there, they're early stage and proven, like CRISPR, as you say. Like, for example, we've beaten the AI horse to death at this stage. We've spoken about it. And despite that, everybody can recognize AI is in its earliest days. And when we talk about AI, it feels to me like we're talking about the internet in 1996. It's clear that there's a value there. It's clear it's powerful, but it's also clear it needs to get to a place where we all know how it operates and we all know how we benefit from it. So I'm not going to choose AI as a trend for 2024, because I
No, I
think
think you'd
it's
get
a little,
booted
yeah.
off the pod if you did that. No. If you
I'll have
said
to
in
leave that one for you.
2021, if you said in 2021, you get some credit now.
Yeah, this is true. I mean, there's other things happening in front of our eyes, like there's a pile of Twitter killers out there, or X killers, Twitter poachers, you might say, like Blue Sky or Threads. So, I mean, that's another, I suppose, trend happening in front of our eyes, but I don't think it's interesting enough. There's the continued rampage, if you like, of the weight loss drugs, which we've
Yep.
also discussed. And you can indirectly or very directly invest in all of those drugs with Eli Lilly, Novartis, Pfizer, Viking Therapeutics. Like, there are a lot of businesses now rushing towards a panacea for weight gain. But again, I'm not going to choose that as a trend for 2024. I'm going to get to a place. Other things that I just thought about when you sent me the Slack last night, saying, "Hey, look, think about things we can talk about around where 2024 is going." I also was thinking about exascale computers, which you spoke about on a podcast about 6 months ago. But these are computers that are capable of crunching a quintillion operations per second, and they basically warp the limits of what scientists can simulate. And
Is
they
this
make
quantum
sort of,
computing?
yes, it is, but it's called exascale computing, which is like quantum squared. It's hyper powered, and there's a couple of players out there like Oak Ridge National Lab. There's I think it's Jülich Supercomputers, China's Supercomputing Center, and they're all private operations. But one of the things that's going to happen in this year is supercomputing is just going to another next level, and how that affects us isn't very clear. But so I'm torn between two trends for 2024, and you've already unveiled one of them. One is, of course, CRISPR, which allows scientists to precisely edit DNA to treat genetic diseases and develop new therapies and create crops and that are resistant to pests and even de-extinct species, which is totally mind-blowing, with the North
Yeah.
American pigeon, I think, being the first of its kind. So there's that family, if you like, of innovations. And then on the other hand, Apple Vision Pro. So
Interesting.
I'm going to call one of those two. Which think I'm going to go with, Mike?
I think you've talked about CRISPR enough, so I'd say you're going the other way, are you?
Yeah, bingo. Yeah, for fun, I'm gonna call the Apple Vision Pro as something that happens in front of all of our eyes, no pun
Yeah.
intended, in 2024. Because anyone who's ever bet against Apple, certainly in the last 10 or 15 years, has always been wrong. And we sat here, and I sat here, and with you, I kind of lampooned the Vision Pro when it was unveiled. But when you look and just consider what this product is bringing to the masses, it's the highest profile micro OLED technology that's ever been brought to market. It's been in development for over a decade, so it's probably going to be pretty cool, despite the battery pack that's going to have to fall down in a cable into the back pocket or sit on the table.
It's going
You
to
know,
burn the hair off your chest as you're lying down on the couch. But
but for a start, it's going to. Sorry, Mike.
Isn't it funny how these VR and AR headsets have been around for at least 5 years? And
Way longer.
what's Meta's what's the Meta
The
company?
Oculus.
The Oculus.
Yeah,
That's
Oculus.
been there, and you've used it and stuff.
Yeah.
But when Apple turns its attention to it, it's like, oh, now it's
real.
now it's the IPO, now it's the public outing. Before this is just kind of fringe.
No, you're on the money. I mean, like the history is littered with these face-worn computers, Google Glass and Microsoft HoloLens. And Meta's, well, did they rename it the Quest, or is that the Oculus? I always get
Oculus
confused.
Quest was the original one. Yeah, so maybe.
And I was a user of the Oculus, as you said, for years. I'd say I have one 8 years. I bought my son an Oculus, and it's probably still in the box. He took it out. We all had a laugh in the kitchen. His friends came over. They played a zombie shooting game, and then it was gone. It was just not wired into things that they do on a regular basis. And nor myself. I thought the Netflix app on the Oculus was pretty cool because you could watch a cinema-sized screen, or it's Netflix on what felt like a cinema-sized screen. But later this year, Apple is going to start shipping this Vision Pro, which is its first mixed reality headset. Now, in fairness, its commercial success remains to be proven. But it is a breakthrough device, and it has a display that's radically better than anything else that has been seen. And the ones I've looked at, the Oculus, are impressive. So to see something that's radically better. But if I can just recap and remind our listeners, what is the Vision Pro? It's a headset which they call a spatial computer, and they unveiled it in June at the annual developers event, and they pitched it as a better way to watch films and experience photos and connect with others, and even to read and create, and basically everything you use your phone for. But unlike virtual reality, which is what the Oculus is, mixed reality overlays digital content onto your real world surroundings, and cameras and sensors embed in the headset, what's going on around you in the room, and they recreate it on a pair of screens, one for each eye. So like there's a camera looking at the room, and it's basically beaming it into your eyeballs, but then the headset overlays whatever digital content you've selected. So whether it's a video where you're climbing a mountain or whatever it is, it's right there in front of you. It's like it's just hanging in thin air. Now, this Vision Pro's twin OLED provides, as I said, really crisp resolution. They're really going hard on that, saying that this is like 8K hyper reality projections. And it means that when you bring this mixed reality in, you've got a super immersive experience, and it just feels like all these apps that we all interact with. If you're an Apple user, your photo apps or WhatsApp or whatever is just sitting there in thin air. And one of the things that the other headsets have lacked is the apps we all use. So whether you use Messenger or WhatsApp or the apps you use, they just were absent in Oculus and Friends. So the big question that remains is, what will people use it for? And Apple, has a suite of apps already ready for this device. It's probably going to be most likely used as a high-end video viewer to make planes and trains a little more interesting. But before I shut up and hand it over to you, what I'll say is that it's going to have to be pretty cool to warrant dropping $3,500. I mean, that's serious cash. I haven't bought a TV for a few years, but when I did, that would get you top end screen and probably a sound system. So I'm not saying it's a TV substitute, but it is kind of like if you're sitting there because you really totally, if you got it. But if I lived in a small apartment and I had a budget of $3,500 for a state of the art TV or the Vision Pro, I think there's a fairly high likelihood the Vision Pro would deliver higher utility, and ultimately it is a substitute for television, just like your handset is a substitute for for your laptop in many ways. But no other company in history has been as successful at developing and marketing consumer technology over the years than Apple. So they're not going on a hunch. This has been tested with users. So I think we're going to see in 2024 the birth of the next human body peripheral device that goes into the mass market.
Interesting. Yeah. It's hard to disagree with you. I think if Apple decide they want to sell everyone in the world something, they're pretty good at it. So I like that trend. And well, they're rolling it out in America soon enough, isn't it?
Yeah, I think it's Q1, isn't it?
Yeah,
So we'll know pretty soon. It's a bit like the first time I saw the headphones, or sorry, the AirPod Pros, or the AirPods rather. Our CTO Alejandro, who's an Apple fanboy, was wearing them, and I was like, "What is going on?" And it didn't take long to accept it. For a while, the early adopters were seen as a little bit odd, but not for very long. Unlike other technologies, and I think when we see people sitting on a plane, we're going to see loads of people sitting on a plane and a train in the next 12 months wearing the Vision Pro.
Interesting. They might be in first class. We might be walking past them as we go to our cheap seats.
Yeah.
All right, before I get into my trends, I just want to give a quick reminder for our friends at Vodafone Business. So check out their free one-to-one digital support and advice service today to discuss a range of topics from social media tips, cybersecurity, and building a website for your business. So just search Vodafone VHub or click on the link in the show notes for this
Or
episode.
just go in and talk to them. That's all we're asking you. I've said it before. Go into Vodafone and go, Emmet sent me.
Yeah.
And they'll look after you. They will.
I'm sure there's a bunch of cashiers who are loving all these people going into Vodafone in South Dublin saying some fella on a podcast sent them
Our
in.
listenership goes a bit further than that. I hope we have people walking into Vodafone in the North Pole and the South Pole.
Okay, so I didn't really do. I kind of cheated with this
Yeah.
for a trend per se, because it's not really a trend. Well, it can be, but it's more a personal inclination. So basically, I'm avoiding tech for 2024. In my own personal portfolio, my research, I think I won't be selling anything, but I'm not going to be topping up any of my tech investments. I think over the last 3.5, 4 years as an investor, it's been too easy to fall into having a very tech heavy portfolio. They've been completely dominated the total stock market. We've talked about the concentration at the top, and there's been a few years where it's done better than 2023. And I know I'm talking back on myself a small bit when, you know, the stats say that you can have a number of good years in a row, but it just, even to diversify myself properly, and because because tech has seen so much growth as well, you know, they become a larger and larger part of your portfolio. So I just want to expand my own circle of competence, we'll say, to borrow the Warren Buffett term, and reach out and research and find great companies in other industries. Because even if you look through like some of the performances from last year, Facebook was up nearly 200%, Nvidia was nearly 250, Tesla doubled, CrowdStrike more than doubled, Amazon nearly doubled, Google and Microsoft flew off the handle as well. So it seems a little too hot for me. And I have a feeling investors might start taking cash off the table, sentiment will shift. And then when it comes to rate cuts, I mentioned before, I think we're at the sell the news stage of the cycle too. And tech companies have, more than anyone, have really benefited from the rate cycle. But even like if you're looking at sentiment out there already, Google is cutting jobs, Amazon is cutting jobs, Duolingo more than tripled its market cap in 2023, and it's kicking off January 2024 cutting jobs, which
interesting. I hadn't read that.
Yeah, which must be absolutely awful if you're working there. Could you imagine having a year like that and then they're turning to job cuts? So I think there is,
like Spotify. We spoke about Spotify before Christmas, where they had a bumper and then laid them off for Christmas.
So yeah, I think it's just beneficial for me personally, and I say there'll be a lot of people in my boat around a similar age that started investing when you couldn't avoid these types of companies, to just look into other sectors, so less glamorous, we'll say. So I've been kind of looking at, my question I asked myself was, what businesses or industries will AI not be able to disrupt, essentially? So it brought me to a number of interesting businesses, and kind of looking at industrials and looking at utilities and all that. So the first company I looked at was Copart. If you're lucky enough to own this business in the last 10 years, you've been doing very well. I think you'd be sitting on a 10 bagger already. It's been an unbelievable performer on the stock market, but it's a very simple business. It's the biggest salvage market in the world for old cars, total cars.
It's the first stock I picked from MyWallSt.
There you go.
Yeah.
And it's still been performing. Even in the last 5 years, I think it's tripled, or even up 300, 400%. And it just does a simple job. It purchases damaged cars from insurers or other motivated buyers, banks, anyone who kind of will find a total car on their books, essentially. Sells it to Copart. Copart stores it in their massive scrapyard portfolio, essentially, and sells it off to whoever wants to buy it, salvagers and all the rest. And they take about roughly 20% of each transaction. So it's not doing anything special. You know, you're not going to be able to replace a scrapyard with AI anytime soon. And I know it's on an online auction, but apart from that, It's a very real world physical business. And what makes it really interesting is that it's essentially in a duopoly with IAA is its main
Yeah.
competitor. It controls about 80% of the salvage auction market. And
Hmm.
because these two companies have achieved such a scale, there's huge barriers to entry. No new entrant can come in and be cheaper. They can't really get licenses for new scrapyards in cities because cities will only want one. They don't want to. They don't want to give out more licenses. So there's so much there to protect it. And then what makes it great is that while it's in a duopoly, it's not like MasterCard and Visa where it's kind of one or the other, more or less. Copart has huge advantages over IAA in the two-horse race, we'll say.
Yeah.
So
Yeah.
it owns basically all of its own land. I think IAA owns about 10% of its land, leases the other 90%. It's the
Wow.
inverse for Copart. It's about 90% to 10%. And this is huge for a number of reasons. One where it really showed up was, do you remember, I think it was Hurricane Harvey in 2017. It hit
Hmm.
Texas and Louisiana and was fairly devastating. But what happened was insurance companies had hundreds of thousands of total cars wrecked, ready for salvage. And Copart was able to take them in, even at a loss, while IAA didn't have the capacity. And it actually
Wow.
stole a bunch of customers from it. So there's a lot to like there. It's a business that isn't going to get disrupted by any new entrants or any high technology anytime soon. So that's kind of where my mind has gone to kick off this year, the end of last year. And I
Mm.
think it'd be an interesting exercise for a lot of younger investors out there who will have a very tech heavy portfolio to kind of take a step back and look at it from a holistic view and be like, all right, well, what am I missing? And
Yeah.
try to find these businesses that are there, that have strong moats, that won't be disrupted by technology, that are very necessary in the real world, and that necessity isn't going away anytime soon. So Copart was the first one of a few others we can go through, but I'll go back to you now, and if you have another stock pitch.
I don't, but I can make one up. But that was
Um,
actually brilliant. I'm very impressed with that because we, for a start, as I said, I'm familiar with the business. The Copart even own scrapyards in Ireland. But before we move off the subject, one of the things I was thinking about in recent times about Copart is the transition to electric vehicles, where there are far fewer bits and bobs you need to keep your car going. I mean, if you had a 1985 Datsun and you needed to get a carburetor, you go to a Copart place and they'll pull one off. They have a state of the art. They have like air traffic control inventory management system in Copart, one of the most enviable software systems in the industry, probably the most enviable. So if you need a washer off a 1972 Mini, they'll know where you can get it. But putting that aside, you go in and get your Datsun carburetor. That's great. But what exists in the electric market? And I know electric is it's cooling a little bit. I know, like, for example, Hertz are retiring their electric fleet, which is pretty incredible. But ultimately, 5 years from now, I wonder what Copart's business is going to look like in a world where we don't need to find a carburetor for our slightly older car. Have you a view on that, or do they have a view on that?
Yeah, so they say it takes about 20 years for, a cycle of cars to be totaled and taken off the road, more or less.
I see.
So it's not
Mm.
immediate. It'll probably be in the next 10 years. And it
Mm.
raises some interesting questions because we'll say of the value of an electric car, the battery is, we'll say, 80% of the salvage value. So you're
Mm.
adding a high value item in terms of the electric vehicle battery, but is there going to be new ways of dealing with that environmentally in terms of storing it, all the rest? Are there going to be reacquisition programs from electric vehicle companies that specifically only want
Mm.
batteries? So it definitely raises a lot of questions. But we can just go back to the main one, is that Copart owns $2 billion worth of scrapyards across the world.
Yeah,
And
incredible.
they're just going to need to store them. It doesn't matter how it gets put back.
Yeah.
It'll raise some questions, but it also is a big opportunity too, because you're adding value to salvage in a big way in terms of
It's
that
huge.
battery.
incredible investment, and that's very interesting. A 20-year cycle, and that makes a lot of sense. So there's cars rolling off ramps today all around the world in car manufacturers that are going to need parts for the next 20 years, and that kind of solves the medium term and certainly probably the long term problem. Okay, I'll hit you with one, Mike. I'm going to go with a stock that I pitched for Horizon, and I have removed from my watch list simply because it doesn't hit all the notes I look for in a Horizon investment, but is a very, very high quality ETF, and it's called the First Trust Nasdaq Clean Energy Smart Grid Infrastructure Index
ETF.
Fund. Adjective. Okay, so it's the longest name ever, and basically, God, I really am I getting? Yeah, it is actually called the First Trust Nasdaq Clean Energy Smart Grid Infrastructure Index Fund. It was some mouthful, I remember at the time, but anyway, what it does is it tracks stocks in the grid and the electric infrastructure sector, in particular smart grid technologies and energy management. And what it has is a criteria like every ETF for inclusion, and businesses must be above $100 million in market cap, which is quite low. That's a nano cap. If you're below 100 million in value, you're a nano cap. And it must have 20% free float and $500,000 average trading volume. So it basically is it's a wide net on a very important emerging industry. And when I pitched it for Horizon, what I said, I made a couple of reasons. I always put down a few reasons why I'm particularly excited about a stock. And in its case, Bill Gates predicted a surge in climate investing. And in the conference that I was listening to and that I cited at the time, he said there's going to be a lot of companies out there that mirrors Tesla's returns. And this grid, ETF, grid for short, focuses on smart grid infrastructure, which is crucial for integrating renewable energy and ensuring efficient power delivery. So it basically, it aligns with all the trends we're seeing in energy, the way that most sane people are thinking about how we need to go in the world. And it is quite an early stage ETF, and it will of course be volatile. And ETFs are not easily bought by us non-US people, but if you're in the US, that's fine. But I think it's a nice one to put there, and I think it also dovetails quite nicely into the point you made, which is if we are going to stand back from the usual rush towards tech and AI and the Magnificent Seven, I think this is a nice alternative that could sit at the bedrock of your portfolio, very future relevant, has the highest quality companies in there, and is ultimately going to be a cyclical bull, or a secular bull. It's going to kind of go back a bit, up a bit, back a bit, up a bit.
Yeah. What's nice about that type of investment is that it's easy to identify the trend, but it's hard to pick a company, especially when they're all so early on in
That's
development. Right. So picking an ETF there, I always admired the ARC genomic ETF, because it's like, oh yes, well, CRISPR is going to be a big thing, but I can't tell the difference between Intellia and Bluebird and CRISPR Therapeutics, and I need a degree to do so. So why not just park it in an ETF? So I really like that as a potential investment. Very good. Okay, Emmet, good first recording of the year. Get it under the belt.
Hey, hold on. Are you not going to give us a second one? Just give us a name, just for fun.
Okay, well, no. How about this? I'll give you a name that's coming next week, and it's going to be along the same line. So industrials, utility.
Oh, you should do it like Wordle. You should tease us. Don't just say the name. It has an A. It has a W. Okay, go on.
So make sure you come back next week if you're enjoying this kind of non-tech focus. The company is Core and Main, and I'll give you a proper pitch. I'll give you a proper pitch for it next week.
It's a banger, Mike. Well done.
All right. Okay, before we finish up, I just want to give you a thank you to our friends at Vodafone Business. If you're a business owner in need of a leg up, just talk to them. Go into your local 19-year-old behind the counter and ask for some Vodafone Business advice. But when it comes to your digital transformation, get yourself over to Vodafone V Hub to book your appointment today. You can find the show find the link in our show notes. That's it for today. Emmet, thank you for joining me, and thanks everyone for listening. If you want to get in touch, you can find us on Twitter at MyWallStreetHQ, on TikTok at MyWallStreet, or simply just email us at pod@MyWallStreet.com. Leave us a review, share us with your friends, and we will talk to you next week.